Welcome back. Hope you're having a good morning. Well, for starters, the gift review suggests that we're coming back after a 3-day weekend and we're going to be opening gap up. So that's good news on the headline index, but plenty of stocks to discuss. And to help us out with that, we have Prakash Diwan who joins us on the show. Hi, Prakash. Good morning. Hope you're having a good Monday morning. Let's talk about a few stocks that came out with this set of numbers. Vedanta, those numbers look much better actually. And the focus on, improvement in the aluminium business, that's showing right now. And as we know, the promoters, at least in the near term, they've got some breathing space because of the refinancing that they've done. How would you approach the stock at around 260 rupees?
Good morning, Nigel. So I think very clearly this particular set of earnings is only attributable, the goodness in the numbers is attributable to that cost efficiency which they managed. And also, if you were to look at the kind of improvement in in the EBITDA levels for the LU businesses, I would rather be looking at something like a Hindalco and working through that pure play setup rather than, Vedanta, which is still a mix, right? So there could be certain things that could go right for Vedanta, but there are lots more that may not. And my sense is Vedanta, while it's kind of got a pause or some sort of an extension of life in terms of this debt repayment, will always be staring at this till almost middle of next year, right? So there's going to be a little bit of a discount to the valuation that you will always see in the case of Vedanta, which may not be the case in Hindalco. So between all of these metal plays, I would prefer that. I would not really jump in, though this quarter has been fairly better than expected.
Prakash, hi, good morning. I wanted your thoughts on HDFC Bank. LIC has now got that approval, right, to acquire up to 9.99% stake. Now, it's only a provisional approval that has come through. It's not that LIC is going to go ahead and acquire. Right. But do you think that, just the sentiment bump up could take the stock out of its slumber? Or do you think that it will continue to be a sell-on rally stock?
Good morning, Sonia. So, absolutely. I think that's the pertinent question that's been discussed in all groups last week. But I think we need to understand what's gone wrong for HDFC Bank. So while things were expected to be soft, Sonia, given the time that the merger is taking to get normalized, the FI positioning, which almost led to a 28,000-30,000 crore exit, is what put a lot of pressure. And most domestic institution on the counter side or the retail market is probably quite bought into HDFC Bank at even levels like 1650, 1700 and all. So, from that perspective, the selling has been a bit one-sided and that's led to this. Now, LIC coming in is a potential backstop to, in case something goes wrong with HDFC Bank and more selling comes in, can probably look at getting absorbed. And remember, LIC has been the smartest institutional investor in town, given that they always buy at lowest levels and would like to exit only when, when they need the money. So that kind of a long-term orientation is an enabler of sorts. I'm not saying, as you rightly said, that they will go ahead and buy the 9.99%, but in the next 1 year, at least, there's a backstop. From a valuation perspective, I think HDFC Bank might get ignored by the market for a couple of quarters, and that's when the real move will happen. So I would believe it's still a great buy. I would buy on dips, even if it falls 40, 50 bucks from here, which seems unlikely at this point, but given market conditions, it could give some more weight, and that only makes it more attractive. So I'm very bullish on the fact that it's a great long-term story. Let the branches roll out, things will start making a big difference.
Prakash, hi, morning. What about, money which has gotten out of HDFC Bank, maybe it'll get back into that one, but it'll not stay idle, right? Maybe it'll find something to do in the banking space, somewhere else. Indocent comes to mind. Any thoughts on this one? Numbers look good. The book has been cleaned up, etc. What's the sense? It's not over-owned.
Yeah, good morning, Prakash. No, so that's a very valid point. If you look at the kind of pair trades that have been prevalent in the market, usually funds, institutional investors who believe a lot in pair trades try to balance it out with with across the sector. It's not inter-sector, it's intra-sector. So from that perspective, a lot of the money I've seen get out of banking, and especially HDFC Bank's gone into the likes of Bharti. I don't know if you noticed, Bharti is actually silently gone up 15% in the series. I mean, where do you see that kind of a thing happening? It's actually an under-owned stock, has been delivering well, and the FI position there is changing dramatically. And this time, rollover will tell you a lot about that. On specifically on IndusInd Bank, Prashant, I think it's a great opportunity to take into a positive correction in IndusInd Bank. It has to move up to regain its past glory. And if you look at Shriram and Chola numbers, which are more CV focused, and IndusInd still has a significant portion there, I think it has better times ahead of itself. There's no doubt. But whether you want to put that same kind of a conviction in IndusInd, the question is it can absorb a bit, but not the same as what you could do for HDFC. My sense is people will look at Kotak. You know, the numbers were not bad. They got ignored because of the climate on those days when the numbers came out. It just got ignored, but the numbers weren't bad at all. And they could improve a lot going forward as the credit crunch starts getting more accentuated. So I would believe there will be dispersion of that money. It could come into the likes of Kotak, Axis, some of the NBFCs, but not necessarily just IndusInd. But yes, IndusInd on a standalone basis definitely is looking positive or right for at least a 15-20% upside in the next 6 to 9 months.
Oh, that's interesting. 15-20% upside for the next 6 to 9 months. Got it. Prakash, big earnings coming up this week, right? I mean, there's ITC today and we wrap up with SBI on Saturday. In the middle, there's Maruti, Tata Motors, Dr. Reddy's, etc. Which one stands out for you in terms of a sure shot, good set of numbers and something that you would put money into?
Tata Motors, I think, is distinctly the one that could continue with earnings that will sustain this momentum that we've seen. And I've been talking about Tata Motors from a very major reset perspective. It's not just improved earnings, but it's going to be a very different trajectory for the company's business post March. So these numbers will probably build that expectation up to the March numbers of deleveraging, the kind of percentage improvement in their EV share, and importantly, Surya, what's going to happen is these numbers will give us some granular details on how margins will start making a comeback on the EV business. When they started off, they had price points which are very far off from what mass markets would like to see. But the fact that they've started launching EV variants in most of their cars, including some which are sub 10 lakhs, is a great move. And that's primarily because of the economies of scale going up in the component vendor ecosystem. So my sense is you'll see all of that getting reflected, even if the revenue or sales numbers are not very impressive, but they'll probably report very good margins. And of course, the deleveraging that's kind of on its way. So I would be very excited to see that happen. Of course, you also have SBI, which might tell you that the story in the banking side is not yet over. We've seen some cost increases go up, compressions of NIMs. But if SBI manages to pull off a moderately good set of numbers, you'll probably see a big revival. The read-through for the sector will probably improve after what damaged HDFC Bank.
Prakash, two numbers that looked pretty good from the NBFC space. One was Shriram Finance and the other one was Chola Mandalam. The asset quality, in fact, in Chola Mandalam has been the best in the last 3 years. Would either of these names interest you?
Oh, absolutely. So, that's what I was referring to when I was connecting it with the change in the underlying portfolio or asset class for IndusInd Bank. What the Chola numbers tell you, Sonia, is that the B2B segment within the rural economy is actually the first that would take off. The consumption side might still be a while before, you start seeing some very robust numbers. And that's why the FMCG guys are struggling. But the transportation, logistics sector, the way it's kind of formalizing itself, I would be surprised if Chola is able to continue growing at double digits or mid-teens of asset growth, the AUM growth. Now, that is something which in a market where everything on credit side is tepid, is kind of fairly anemic, the NBFCs will probably march ahead in terms of building a book. So very clearly, there will be money that will get allocated a bit more to some of these larger NBFCs, some of the stronger NBFCs. So that's precisely where, the numbers tell you that you probably have another 12 months or 18 months of a secular run in terms of this underlying portfolio improving. So I'm quite positive on that. Shriram, from a valuation perspective, has been a bit expensive always, but I like Chola given its aggression that's come back in terms of growth.
One space is the public sector space, Prakash, which we've not spoken about. And there the moves continue. Railway, non-railway, and the stars, if we can pull these up, I mean, this of course is the pre-open now starting up. NBCC was a big mover, Railtel, Rights were big movers, Shipping Corporation was a very large mover on Thursday, last trading session, And even, these lesser talked about previously in almost defunct companies, right? MTNL, Fact, which is the fertilizer company. These are coming back. PTC was a big mover. IFCI, for example, large volumes, big moves. And of course, names like Chennai Petro have done very well. Any thoughts, Prakash?
So I think that's a vast list, Prashant. But what very clearly stands out, if you look at what's moved and what is now moving or is yet to move, there's a very clear stratified approach in PSUs. You had the frontline performing PSUs from defense or railways or power that moved ahead. The market starts seeking a similar theme or a similar expectation of moves within the second tier companies. And that's exactly where all these names, which are otherwise not very well discussed or well talked about, we start seeing them come to the fore. But I would stick to business models which are very uniquely placed and where valuation comfort is still there, because quite a few of these PSUs are over the top in terms of price to book, price to sales, whatever you want to look at. So look at Gas Authority of India on the hydrocarbon side. I think it still offers a tremendous amount of opportunity given what's happening around in that ecosystem. The second side, the mining business, we've seen NMDC, and Nigel can vouch for that. We've seen the kind of richness in earnings that's come in, the quality of earnings, the way it's grown for some of these miners. And that includes the like of GMDC, NMDC, all of them. But Moil is one name which probably hasn't performed all these years in the same way. So, you could probably see a change in there, because what Coal India is indicating, what NMDC is indicating, that output throughput ratios have dramatically changed for most of these companies, given the new energy that's come into the PSU working. And I believe there will be some sort of an upside that you could still kind of bargain for. So, you'll have to be selective, Prashant, for sure. I wouldn't paint all of them with one broad brush, but selectively on a bottom-up basis, some of these names very clearly stand out as tactical plays for the next 6 to 9 months.
Okay, all right, Prakash, always good hearing your thoughts. Thanks so much for joining in this morning and discussing all those stocks. Wishing you a good day ahead.